overall total town network will go to 700 by FY28. They're targeting brand power growth in the Gen Z segment by around 500 basis points. They aim to double their revenue and profit CAGR. So the CAGR will be in double digit, and a 200 basis points margin improvement by FY28, and they see around 3,000 plus Domino stores, as I mentioned earlier. They've also said that they are aiming to build platforms, and the platform revenue, that is their online sales revenue, will touch around 1,000 crores, and this will happen along with scaling up their digital platforms overall. Free cash flow maximization is something that they're aiming at. And lastly, in terms of profit as well as revenue CAGR, they expect a double-digit CAGR going ahead. So this is the overall picture as to how Jubilant Foodworks is planning to scale up their business. And of course, the physical analyst meet will answer certain questions like, how competition is faring in terms of Zomato versus Swiggy. Although their overall growth, that is their gross order value growth, was better than these food aggregators, of course on the back of a lower base. But certain questions like Popeye growth, how DP Eurasia, that recent acquisition, is doing, is something to be watched out for in the physical analyst meet.
I also want to know about how they're contending with competition from the unlisted space. A lot of small players coming into the space, at least here in Mumbai. Right, the unorganized space, right? So, by the way, before we go to our experts, we should also mark Ultratech Cement and the implications of its announcement of 1,800 crore venture into the wires and cable space. Is not something that will take off immediately. Of course, capacity will have to be set up, but it has had an implication for the rest of the cables and wires companies right now, and you're seeing that on the screen. Apologies. Let's bring in Mihika to tell you about what the announcement is and why some of these stocks are reacting so negatively. Mihika?
The main trigger is an 1,800 crore capex plan that has actually led to around 30,000 market cap loss for Ultratech and the top 3 cables and wires business. Now the company has announced a capex plan to enter the wire cables business, and they're going to build a plant in Gujarat. But it depends on whether they enter cables or wires. For cables, it's better demand, it's been growing. However, it takes 2 to 2.5 years for product development, a lot of client approvals in place. But wires is a better segment to enter for new players, but it's seeing slow growth. Now, if Ultratech has an advantage or not, well, there's negligible synergies in terms of raw material sourcing, transportation, distribution. It also has different influencers. Wires is distributed via electrician point of contact, cement via contractors, and there's no right to win strategy in terms of manufacturing and distribution. Brokerages have also cited concerns for Ultratech in terms of how it could hurt its positioning as a pure play cement player, and concerns around its capital allocation. And then you have the cable and wire companies under pressure: Polycab India, RR Cable, KEI Industry, Havells India, Finolex Cables, all of them are under pressure. Now Ultratech's 1,800 crore investment is 22% of the total gross block of the top 7 listed players in India, and gross block is the total value of a company's investments in fixed assets before depreciation. And Ultratech's entry in this industry may first hurt the industry EBITDA pool, just like we saw in paints. Margin contraction is likely. Analysts are also saying there's a potential for a price war, and there could be an inorganic opportunity for faster expansion, and this possibility can't be ruled out. Lastly, we have Motilal Oswal has cut the valuation multiples for Polycab India, KEI Industries, RR Cable by 20%, for Havells by 10%, and they've also downgraded the ratings on KEI Industry, RR Cable to a neutral from a buy earlier, while they maintained their buy on Polycab and neutral on Havells.
All right, thank you so much, Mihika, for giving us all those details. But with that, let's welcome in our guest for the day. Vinit Bolinjkar from HOR Ventura Securities is joining us now, and Akshay P. Bhagwat, Senior VP at JM Financials, is joining us now. Welcome to both of you, gentlemen, and sorry for keeping you waiting. Some important aspects needed to be addressed. And we also have our first caller lined up. Kanan from Chennai is calling in. Kanan, a very good morning to you. How can we help you?
Hi, very good morning to everyone. Yeah.
Good morning. Go ahead with your query.
I am holding 100 shares of Reliance Industries.
Okay.
I just bought a few days back. So I thought, the stock is just looking for the reversal zone.
Right.
But it seems like it is still falling down.
Right.
Yeah, I can hold this stock up to 2 years minimum.
Okay.
So I just want to know, I can accumulate this, but I just want to know which phase I can accumulate this stock, because it is still falling down.
Got it. Got it. Karan, got your query. Vineet, I'll come to you quickly on this one. RIL is the counter. He's entered at 1235 levels, and he says he's a long-term investor and he can accumulate more. But what are the right levels to enter in is something that he wants to know. What's your view?
So, I think that, Reliance is an index stock and it is going to fall in line with the market and it will outperform the market to that extent. So, you will see a fall which is lower than the market. And you should accumulate this stock somewhere time-wise around the 15th to 25th of March. The reason for this is that, a lot of tax selling will happen in the coming days. People will be adjusting their books and in that, there's absence in the market. So that would be a good time point to buy that stock. And on a price-wise basis, I think anywhere, between 1150 and 1125 would be a good level to, average your purchase.
Interesting perspective. Would you stretch that to any other counters, Vineet? And just to clarify, you're talking about people booking out capital losses before the end of the financial year so that they can account for it in this year, and you can set that off, of course, capital losses over 8 financial years. So would you extend that thesis to any other names?
I think it would happen across the board. So wherever people are sitting on losses, they are going to book their loss. Because, if you are a new investor and a professional investor, you're sitting on substantial losses. So you book your loss right now, and buy it at a lower level after a few days. And then, between April and August, we've seen over the last 3 years, this has been the pattern, where we've seen that the markets bottom out in late March and they rally very strongly across April and May. So, and that rally will get further strength depending upon how the monsoon plays out and, how the international markets are. So I believe that, we will see a very strong rally play out in April, which will be a recovery rally. And, to take advantage of this tax selling, one should be buying strong fundamental stocks which outperform the market in the month of March.
And that's interesting perspective. I'm wondering whether our technical expert also agrees with the thesis and whether or not the bottom will be found in March. But let me go across to the first WhatsApp question today, and we've got a question on KNR Constructions. This is from Annamalai, who's writing in from Tamil Nadu, and he's bought 430 shares at a price of 317.8 or 9 rupees per share. Can he start buying more at these levels? The loss is considerable because he's bought at elevated levels, 317. The stock is currently at 225. On the technicals, Akshay, what's the view?
Good morning, Alex.
Good morning.
Technically, the setup is pretty negative. You have had last couple of months where there is a massive selling noted in the stock, right from 350 to 225 as it stands. And it doesn't stop here. Further downside till 200, 210 is in the making. So the suggestion is better take an exit in the stock and move over to some stocks where opportunity presents you for a greater return in the next reversal of the market.
Right, so that's the view coming in with respect to KNR Construction. We've got our next caller lined up. Murli from Bengaluru is calling us. Murli, a very good morning to you. How can we help you?
Very good morning to you. Yeah, I bought 200 shares of Lloyds Metals and Energy recently.
Okay.
At a price of 11.23.
Okay.
Considering their backward integration, mining boom expected.
Right.
And I thought I can hold for at least a year.
Right.
And the price has come down to 1084 now. Whether I can average or hold it as it is. I have only 200 shares now.
Okay. So,
waiting for 1 year. 1 year I can.
1 year. Okay. So, you've studied the company fundamentally. So, I'll go to Vineet for this one. Vineet, what's the view with respect to Lloyds Metals?
So, I would like to tell the subscriber that, he's got a very good company. They're expanding capacity very, very well, all through internal accruals. It is the only company in India which is not taking debt in the metal space and expanding, doing a capex of almost 20 to 25,000 crores over the next 4 to 5 years. So a lot of value addition coming in, moving in from, manufacturing sponge iron and pellets to value-added products. So I would suggest this investor to hold on to this stock, not to panic. And at lower levels, you can average. Just understand one thing, that metal stocks can show very volatile trends. They got very high volatility and they move vertically in both directions whenever they do. So the idea would be to, as I suggested earlier, that somewhere in the month of March, when you're seeing that the stocks are bottoming out, whatever be the price level, that is when he can look to average his stock.
Okay, so that's a comprehensive view on Lloyd Metal. VST Industries is the next counter that we're talking about, and we've got Sanjay Maitra, who's Moitra. I think that's the right pronunciation. Sanjay, please forgive me if I've got it wrong. Writing in from New Delhi. VST Industries is the name of the counter, and he's bought at levels of 390, wondering what to do for a 3-year time horizon. Should you hold or exit? And I will take it across to Akshay on this one. Akshay, it's a loss, and he's down about 12,000 rupees or thereabouts. What should he do? Should he average at the current price for the long term?
Technically the price structure is negative, and the way the prices are setting up, possibly 230, that's in the making. So if you're open to averaging, your time horizon is long term, then I think 230 is where you need to average it out. That is a massive support base for the stock, going by the last 5-6 years of history, and there is a good chance the stock will bounce from there. Overall, my expectation is the stock will stay in the range of 240 to 360. Buy at lower levels at the dips of around 230, 240, and look to close it around 350, 360. That's the advice I have for VST Industries.
Okay, all right. So that's what Akshay wants to say about VST Industries. Let's get our next caller on board. We've got Venkat Rao, who's calling us from Hyderabad. Hi, Venkat. How can we help you today?
Good morning, sir. This is Venkat from Hyderabad.
Yes.
1 year back, I bought HFCL shares in 150 rupees.
Okay.
So now it is trading at 85 levels. So
84 levels, yeah.
Shall I hold it or
exit?
Average it, exit it?
Yeah. What is the time frame that you have in mind, Venkat?
1 year, 2 years, 1 or 2 years.
1 or 2 years, okay. Vineet, fundamental coverage on HFCL, what would you do if you're incurring a loss right now? 150 level is a buy price.
I don't think you should be selling this stock right now. We've done some comprehensive work on the company. We had put a buy. It hit our stock price target of around 156. Now, it is selling off along with the other stocks. One of the reasons why the sell-off has been steep is that the company has not actually lived up to its statements where they said that they would be, doing a lot of defense work. Somewhere, these deals have got delayed. And, but keeping the potential of their business in mind and, the prospects of their fiber business, I think it is a very good buy at current pricing. But, the entire environment is so volatile that, taking no action on this stock would be the best way out. Just hold on to your stock and let this meltdown, play out.
So that's the view with respect to HFCL. But an interesting fact, Alex, one of our researcher had pulled out, March seasonality data for the past 10 years, and HFCL was the counter which has given negative returns in 7 out of 10 years in March, and the average downtick in the stock was around 9.6%.
Wow, okay.
So just an interesting fact out there on HFCL. The next query that we have is on Oil India. Dr. K.N. Manikanta is holding around 140 shares of Oil India, and he wants to know whether he should hold at the current levels or accumulate. His average price is 480. He's not mentioned whether he wants a fundamental view or a technical view, but I'll take this query with you, Akshay. What are the charts looking like for Oil India?
Well, the charts are negative, but the point is that the prices are heavily oversold. This stock has had a one-way fall in the last 5 months, I think from 750 to 367 where it stands. So the probability of a recovery, since it is heavily oversold, looks very high. This recovery should ideally mature from the levels of 350 odd levels plus minus 20 odd points. So if you're open to averaging, those are the levels for, but really the last 5 months of selling doesn't augment well for the overall setup. So I'm looking only at a pullback rally, which as of now, the best case scenario looks like 450. So the advice is average at around 350 and try to look for exits around 450.
That's the view on Oil India. Reshma Bhatia is asking a question that I hope that somebody would ask, which allows me to go to Vineet on how you should play, if at all, the sharp drop in the prices of the wires and cables companies. And she's specifically asking about Finolex cables. But let me extend that, Vineet, to the rest of the counters. In conversations that we've so far had today, the suggestion was that before the entry of Ultratech, or the announcement of an entry by Ultratech, some of these companies had multiples that have changed over the past couple of years from 15 times forward to over 45 times or 40 times forward. And this is simply a reaction to a negative update for the sector as a whole. And after this drop, they're unlikely to rise very substantially because already the valuations were stretched. Do you also have that view? And would you buy into any of these names?
So, we always had a view that the valuations were quite expensive. Amongst all these, Polycab is one of the very strong contenders. And, however, we have to understand one thing that, look at the psyche of Ultratech as a group. So, Ultratech belongs to the Kumaramangalam group. They have entered into the innerwear industry through their retail format because Page Industries P's were very high. The next thing that they did was to enter into this the paints industry, and we saw what happened to the paint industry. They had very high valuations which have come off. Companies have lost market share, and to defend market share they had to drop prices. So third thing, what is going to happen is that there can be a little bit of EBITDA pressure on Polycab and the rest of the group, given the fact that, the DNA of the Kumaramangalam group is cost consciousness. So they will drop prices. They are looking at a large capex of 1800 crores, which is about 22% of current market cap or current industry size. So they are looking for a 15 to 20% market share in the industry eventually. So until they don't get this market share, I don't think that the pricing will stabilize. So what we are going to see in these other stocks is their margins compress. There's going to be fierce war beating. But, there's a very interesting angle to this also is that, I was talking to one of the companies is that when the export potential is so bright, why don't you guys export? Because the margins in export are very good. So, the volume share of exports has gone up to about 10% for the industry. And this industry can draw, relief from the fact that, exports can be a very big option. So the companies which drive exports will be able to protect their margins and move ahead.
Which ones would those be currently? You're saying 10% right now is exports, but is it the market leaders?
Yeah, across the board, average industry is about 10%. Okay. So the guys who have got a good coverage globally, have got a large share, will do well. So I think Polycab is one of the really strong companies, got a good brand. The other cables companies which establish their own brands, they will do well. Diamond Cables is one who insulated into the higher end cables. That company could, probably go through the. See, Havels is, we are a little bit negative. Actually, we came out with a sell note because, over the 10-year period, their growth rates have been very choppy. They've not had a secular run like what Polycab has got. So I think one of the stocks which will suffer a lot is going to be Havels.
Understood. Okay. All right. Thanks for that comprehensive view on the cable stocks. Vineet, Akshay, do stay with us. We have to slip into a very quick break. On the other side, we'll start with Satyan's question. And it's an interesting one. Do stay tuned.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screen to ask all your queries. We have our next caller lined up. Shweta from Hyderabad is calling in. Shweta, a very good morning to you. How can we help you?
Hi, good morning, Mahima.
Good morning.
My question is regarding Vijaya Diagnostics.
Okay.
And I have 90 shares bought at 1119.
Okay.
This share is showing huge volatility nowadays. One day it is increasing 15% and today it is down by again 10%.
Right.
So I want to know the fundamental view of this stock, and I would like to know whether I should average it at the current price or should I hold or exit.
All right. Got your question, Shweta. Vineet, I'll come to you. Vijaya Diagnostics is the counter. What's the view like?
They're good company. They have done very well in their micro market where they operate. But the valuations are a stretch, and we think that the stock can come off by another 10 to 15%. So I think a level of around 800, 825 would be a good level to average the stock.
Okay, all right. So that's the view on Vijaya Diagnostics. The next question is on BEML, and this is Satyan's question. He's writing in from Thrissur in Kerala. Akshay, this is for you specifically. Can it be bought at the current market price? And if so, what is the target that you would put on the stock?
First of all, the technical price outlook is negative. It is just that being heavily oversold, there's a probability of a respite rally or a bounce back. So if you're actually considering for buying, I would recommend the support at 2,500 is a good level to buy. But buy from a short-term trading perspective, the probability of a bounce back from 2,500 can see the stock recovering all the way till 2,850. So that's more of a trading buy call. On the positional front, I think somewhere 2,500 plus minus 40, 50 odd points, it can take a support, but really overall the counter is not that great. It has still a negative setup. So the best case for a respite rally from a slightly longer term holding perspective is 3,250. That's the best case scenario I see right now going by the current data readings.
Okay. We've got our next caller. I believe it is Krishnan Nair. Is that right? Krishnan Nair from Delhi?
Yes, sir.
Hi, Krishnan. So you've messaged me as well. I had saved your question, but then you can ask it here. It's on GMDC, right? Please go ahead.
Yeah, I am holding around 6,241 shares of GMDC at a buy price of 405.
Okay.
That was bought, I think, sometime in July last year. And I bought it with a thought that this company is good in paying dividends, and also the earnings per share looked good to me at that time. And the dividend came in October, even though there was marginal loss of value. I thought it will pick up later. But now it seems slightly in a downward stretch. So what is the opinion on this? Should I average or should I exit?
Okay, so let me get this straight. The thesis was that you wanted to buy this and keep it in your long-term portfolio, and you wanted it as a dividend play, correct?
Yeah.
Okay. Vineet, from that perspective, he's actually he's seeing quite a bit of capital erosion on this stock. What would you do with something like this if you're incurring this kind of a loss?
So, I would like to just tell the viewer that, whenever you buy a dividend-based stock and you buy it in a metal and mining company, you must be aware of the fact that, metals and mining, they've got very volatile trends because their prices move very swiftly and their values also change accordingly. He bought it at a point when the sector was booming, and now we are seeing a decline. So the decline is going to be steep in the stock. Having said that, since he is holding it since July, I would suggest him to continue to hold this stock. There is going to be more downside also, but around the levels of 160, 180 is where he can look to average. I am not suggesting a very recent price to buy because, as I told you, these stocks can have very sharp dips. And to, average out your portfolio truly on this stock, you must buy it when the hits are very deep.
All right, so that's the view with respect to GMDC. The next counter that we're talking about is Inox Wind. Amir is holding around 1,180 shares of Inox Wind, bought at 183 a piece, and he's sitting on a loss of 30,000 rupees. He wants to know whether he should hold or sell and book a loss at the current market price. Akshay, I'll come to you. He has a horizon of 6 months. What are the charts looking like, and what should he do?
Well, the charts are still negative, but the probability of a recovery from the levels of 7,950 to 8,000 zone looks high. So if you're open to averaging, I think 7,950 is a good level to average. You can expect a relief pullback rally from those levels, which can target around 10,000 to 10,500 in the best case scenario with a time horizon of a couple of months. So buy on dips and try to take an exit around 10,500. That's the view for Inox Wind Energy.
So that's the view with respect to Inox Wind. The next caller we have is from Chennai. Ramesh is calling in. Ramesh, very good morning to you. I believe you have a question on Jio Financial.
Yes, hi. Good morning, everyone.
Good morning.
Ramesh here from Chennai. So my question is about, like you said, Jio Financial Services, since Jio and Zomato is going to join a Nifty 50 in March 28.
Right.
So my question is, like, is it at the current level? Is it good to start accumulating this stock? And I'm just wondering, like, the fund houses, they'll just start selling that Britannia and Bharat Petroleum, which is going to exit from the Nifty 50, and they're just going to start buying this Zomato and Jio Financial Services. So can we see a sharp price hike in this share after March 28? So what I'm expecting is correct, or like is it a right time to invest, or do I need to wait for some more time to start accumulating?
Got your question, Ramesh. Vineet, I'll quickly come to you on this one. Is his approach correct with respect to Jio Financials, or is it already baked in?
So, the thesis that the stock will do well because it is going to come into the index is fully well understood. But, my take is that Jio Finance, what is the business model? They've not been very specific about it. There is no roadmap to what they're going to be doing. Just because it is a Reliance company, do you want to buy it? And because it is coming in the index. So at best, what I can say is that Jio Financial will be a market underperformer until and unless the roadmap to its growth journey is made very specific by the company.
Okay, all right. I'm coming back to you, Vineet, on the next one, and it is on Philips Carbon Black, PCBL. Sumant from Hyderabad has already bought in at levels of 352, so he's in the green right now. It's one of the stocks that has gained about 5% over the last month, and I'm pretty sure that there's not too many that have gained in that time frame. He says that he's a long-term investor and he wants to know whether to continue to keep deploying in this counter, or should he hold on to what he already has? What's the view here?
So, buy on declines is what I will say. The company is very, very aggressively guided for 20,000 crore EBITDA 20,000 rupees EBITDA per ton, and which is very, very strong. And they're getting into specialized chemicals. Their value-added products is going up. Their water vertical is doing very well. So I believe that, the growth triggers are there. This company will do really well going ahead. But as I said, the buying this stock in this market is on declines and not getting courageous and going out and trying to buy false breakouts. It's best to buy these stocks when they dip down.
All right, so that's the view with respect to PCBL. We have our next caller lined up. Sundar Rajan from Chennai is calling us. A very good morning to you. I believe you have a query on Trent, if I'm not wrong.
Yeah, good morning. My name is Sundar Rajan calling from Chennai.
Right.
I bought 60 shares of Trent, 6,400 rupees, average price.
Right.
But it is, price is coming down. Can I average it, or can I add some more units to average in the current price, or can I wait for some more time to add?
Right. What's the horizon looking like for you? Are you a long-term investor in Trent?
Yeah, I am long-term investor.
All right. So I'll take your question with Vineet. Vineet, he's sitting on a loss of around 92,000 odd rupees, and he wants to know whether he should accumulate more at the current levels, and he's a long-term investor. What's the view like for Trent?
Definitely accumulating the stock in piecemeals over a period of time would be the strategy to buy this stock. It has seen a stupendous rally from 3 digits to 5 digits, and it's correcting that now. While the fair value is on the higher side, around 50 cents, 5,800, buying these stocks, without catching a falling knife is the way to go. Let it bottom out. Stocks, when they bottom, they do make a, base formation, let the price stabilize. And once it stabilizes at a certain level, it is a good stock to buy into.
All right. This is an interesting question, and Arjuna Rao is asking it. Power Grid Corporation, he's not giving me his buy price, but he's saying that he's losing about 18% of value, and the stock is currently at 256 or thereabouts. Should you continue to hold? Akshay, on the charts, what's the view on this one? This is actually a counter that a lot of people had bought into, and perhaps also at elevated levels. Is there any sign that a bottom has been found?
Honestly, looking at the magnitude of selling which we had in the last month, it may take some more time to get a strong support zone. As of now, the current trading is suggesting that probably somewhere around 225 to 230 is the zone where the stock might potentially take a support and try to see some bounce back. It's not a momentum-based stock. Clearly, buying on dips is what I would recommend. A lot of patience would be needed. Time would have to be given from an investment horizon, minimum 1 year. Then 230 odd levels is where you should look forward to averaging the stock.
All right, so that's the view with respect to Power Grid. We also have our next caller, Govinda from Odisha is calling us. Govinda, very good morning to you. I believe आपकी query Vari Energies पे है.
जी, good morning.
जी, good morning.
जी, मेरा एवरेज प्राइस है वारी एनर्जी का 2264 50 शेयर है.
ठीक है.
तो मैं होल्ड करूँ या सेल?
ठीक है, एंड ये लॉन्ग टर्म पर्सपेक्टिव से है, करेक्ट? जी, okay. Vineet, I'll quickly come to you. Vari Energies is the counter. What's the view like?
I think one should put a hold on this stock because we believe that the renewable energy space is going to do really well going ahead. So would recommend to hold this stock at current levels.
Okay. But in your opinion, just a follow-up to that, Vineet, is this the best play in the renewable space, or would you say that there's a stronger play?
In the renewable space, I would go with Adani Green. And I'll give you the reason why, is that land is already bought. Okay, it is the best-in-class solar radiation land. Their projects are coming on stream at an aggressive pace. This year, their pace has been delayed slightly. But going ahead, the rollout is going to be very strong. So, I would rather go with the energy creators than the ancillary suppliers to these companies because, you have a 25-year window of clear profitability established.
All right. Standard disclaimer, of course, NDTV Profit is part of the NDTV Group, which is owned by Adani Group. All right, let's talk about Hero MotoCorp then. And we've got Avinash Meral, who's writing in from Indore, Madhya Pradesh, and asking about it. He's bought at levels of 4,967, which is very elevated. And he's wondering what the prospects are from this point. Vineet, I'm coming back to you. Apologies. I've got a lot of names on my screen, so therefore I've mixed it up. But Vineet, I'm coming to you on this, right? So you're seeing a lot of interesting trends develop in that two-wheeler space, but most importantly from my perspective, and correct me if I'm wrong, you're waiting for resilience in the rural space to turn into significant volume growth for a company like Hero MotoCorp, which depends on that, right, in the commuter segment. What would you do? Would you hold on to Hero?
And definitely I'll hold on to Hero because, we believe that the need for transportation is very high. The infrastructure is playing out very well in the country, infrastructure development. Second thing is, we are going to see one very important trend play out in the, transportation space. Is that with the launch of Tesla, I believe that the inclination to buy a EV is going to be very high. So whether you're buying a Tesla or you're buying another car, which is going to be an EV, or you're going to buy a two-wheeler, which is electric, is going to be very high. And I think we have reached a point of inflection where that growth is going to be very strong. So there, I believe the stocks which are going to benefit immensely are going to be Bajaj Auto, primarily followed by TVS. So given that fact, and Hero is very late on its launch of the EV products. So, unless Hero can show that it has got the mind space to get that kind of growth is a debatable question. And hence what I believe is that Hero Motor is a hold at these levels. It will bounce back. But, once it bounces back, it is better to move to a counter like Bajaj Auto or TVS, which have shown to, be of more resilient than Hero Motor.
All right. Okay, so that's the perspective on Hero MotoCorp and indeed on the automotive space. We've got a caller. Sanjeev is calling us from Noida. Hi, Sanjeev. How can we help you today?
Yeah, hi, good morning.
Good morning.
I have a question on this Ola Electric.
All right.
I have 3,000 shares, bought an average price of 107, and presently I'm incurring around 1.5 lakhs loss.
Right.
I want to know what is the long-term outlook and any level can you suggest at which I should start averaging if at all it has been done?
Okay. Vineet, incidentally, since we did speak about the automotive space and you mentioned electric mobility, you did not mention Ola Electric. You talked about Bajaj Auto, you talked about TVS. What would you do with an Ola?
So, Ola, as they've lost the mind share with the customer. So unless they're able to get that brand value back in terms of product quality, servicing, post after sales, etc., I don't think that stock is going to do very well. And in the face of competition from the incumbents who have already got a good distribution network, Ola has tried to match that with a very fast rollout of almost 4,000 centers. But to me, getting the brand quality going is very important, and Ola has not been able to do that. So that is why I did not mention Ola to you.
All right, so that's the view with respect to Ola Electric. The next counter that we're talking about is Cera Sanitaryware. Do we have the name of the, I think, okay. Bhupen Mehta has a query on this particular counter and he wants to know whether this is the right time to enter the counter or not. Akshay, I'll come to you. Are the current levels attractive enough to enter Cera Sanitaryware?
Well, unfortunately not. There is still some more downside to go. Looking at the intensity of the selling, which we have noted in the last couple of months, there is a high probability that the stock may visit somewhere around 4,700 to around 5,000 odd zone. So it's a 300 odd point range where a possible bottom can be formed from a trading perspective. So wait for levels of 4,700 to 5,000. It's a 300 point range where you can consider buying the stock in tranches. Once it tests those levels, you can expect some respite rally from those levels.
Okay. Just want to clarify, Vineet. So it's a sell on Ola?
It has come off quite a bit. I would still give it a few months to, tell us what they're actually doing with it. How they're trying to regain their mind share. Since it's fallen quite a bit, I won't actually put a sell on it. I would wait for 2-3 months to see how the, monthly numbers come out. And if there is any kind of upside in that, then, we would, revisit our decision. So I will put a hold on it for the time being.
Hold. All right. The next question is, in fact, from Swapnil, who's calling us from Pune. Hi, Swapnil. How can we help you today?
Hey, Alex. Very good morning to you, Mahima, Vineet, and Akshay.
Good morning to you. Please, go ahead.
Yeah, I'm looking for this Dhanuka, Alex. So long term, 2 to 3 years, do we see any upside for it, like 60% compounding upside? This is a fertilizer based and there was a good monsoon, but still last 3 months I'm not seeing much movement upside.
Swapnil, you're talking about 1.6 or 6.0? When you say, when you say
1450, I brought it for 1240 shares.
Right. Okay. And what is the upside that you're looking at?
Around 60%, 50 to 60% compounding upside for next 2 to 3 years.
Okay. Cumulative, you're saying, right?
Yes, cumulative.
Okay. Okay. Any specific fundamental view on this one, Vineet? Is that potential possible? You would require in the next 2 to 3 years, if you have to have a 60% upside, a very substantial growth in the earnings. Is that something that's on the cards?
So, we don't track this company aggressively, but what I can suggest is that, Trump has made certain announcements where, he's revoked the ban on certain chemicals, agri-chemicals. And, that it's a possibility that Indian players could be beneficiaries of this. But, I have not looked at it. So this is my limited point that I would like to put on this.
Very quickly take it to Akshay. Akshay, on the charts, 60% upside over the next 2 years, is that something that is possible?
Yes, the longer term charts are absolutely strong. It's the short, medium term, which is the pain point. So it's about timing, which is the right point to get into the stock. My sense is one more leg of downside is due. Probably 1200 can be the possible bottom area for the stock. So averaging out around 1200 is the best opportunity I foresee in the stock. Technically, 1050 is a stop loss you can keep from a risk management perspective. And if it recovers hard from 1200, you can re-expect the stock to revisit 1800 plus in a time horizon of a couple of years.
So that's the view with respect to Dhanuka Agritech. The next counter that we're talking about is HAL. Rana from Delhi has purchased around 50 shares at 4,700 a piece, and this is from a 3 months perspective. He's sitting on a loss of over 72,000 rupees. Akshay, what's the view like with respect to charts where HAL is concerned?
Well, unfortunately, the defense pack has seen a severe beating, and still there is no sign of a bottom close by, at least in most of the defense names. And if I particularly were to look at HAL, then possibly 2750 odd levels is what where the stock is headed for. So clearly, there's a negative price setup, and I would recommend to exit this counter from a 3 to 6 month perspective.
All right, exit and book losses, the view coming in on HAL from a 3 months perspective. We have our next caller, Alex from Kerala is calling in. Alex, a very good morning to you. How can we help you?
Good morning. I have a query on Berger Paints.
Okay.
I am holding 110 shares of Berger Paints at the price of 449.
Okay.
I bought it recently. I bought it somewhere January, February that time.
Right.
February. I have done a fundamental analysis on this, and actually the results, last results are good actually for this up to the analyst, and they have increased their market share also.
Right.
When compared to Asian Paints, their results are much better, and they are trying to acquire AXA Global also. When we compare with the Asian Paints and the Berger Paints, this Opus entry, in my view, I think it will not affect, because for a long time they have a footfall on the market, and Opus will try to...
Got your query, Alex. I'll take your query with Vineet. Vineet, he's analyzed the stock well. Although what he's saying is that Birla Opus might not hamper Berger Paints, but that's not true. The competition in paints, sector is playing its part. But what's the view with respect to Berger Paints and, of course, paint sector as a whole?
So we have to understand one thing is that the paint sector is an evergreen sector. So with real estate, you get new buildings. Without real estate growth, you get repainting that happens, right? So to that extent, he's bought a very good stock. Secondly, he's bought the stock after the market has, adjusted to the entry of a new incumbent. Third thing, what he has done is he has very widely said that, the market share gains have been very strong. And they're also looking to do a acquisition which can be more positive in terms of distribution and brand perspective. So I think he has chosen a very good stock. And I believe that, the worst of the paint industry mostly done with. And, Berger Paints could be the leader of the pack from here.
All right. It's time, gentlemen, to hit the rapid fire segment. You know what this means. We'll throw as many questions at you over the course of 2 minutes. Do try and keep your answers as concise as possible. The first question is from A. Mohan, who's writing in from Warangal. GMR Airport is the name of the counter. He's bought at 80 rupees a piece. Should he hold or sell? Akshay?
Well, sell is the recommendation. Resistance is at 72, expecting 64 on the downside in short term.
Okay.
All right, JK Paper is the next counter. 365 is the price at which the person has got it. What's the view like, Vineet, from a longer term perspective?
A hold.
Okay, IDFC First Bank is the name of the counter. Ankit Sharma wants to know, bought at levels of 83.3. Is it a hold or a sell? Vineet?
I would hold on to this one.
All right, Genus Power is the next counter. What are the levels looking like on the charts, Akshay?
Well, Genus Power is still negative, so I would recommend it to exit.
Okay, that was Atul's question. Peter's got the next question. JK Paper is the name of the counter. 365 is the buy price. Time horizon is 3 years. Would you hold or exit, Vineet?
I just said hold.
Okay.
All right. Venkat is holding 1,500 shares of Tata Motors at 749. What's the view like from a longer term perspective, Vineet?
Around 550.
Sula Vineyards is the name of the counter. Vineet, this one's for you. 620 is the buy price. 10 years is the horizon. Would you hold?
Definitely hold.
All right. Honeywell Auto is the next counter. What are the charts looking like, Akshay?
Honeywell, the charts are still negative, some more downside to go. If it's Honeywell Automation, probably 32,000 is where you can consider buying it.
Okay, Britannia, for the relatively short term, Ramya wants to know, because of the exit from the Nifty 50, would you sell? Akshay?
Britannia, I will hold it. Maybe it's in the process of forming a bottom, 2-3% down more, but I would recommend a hold.
All right. Ajmera Realty bought at 875 a piece. What's the view like, Vineet?
No view on this, please.
Okay, SBI at 52-week low. Would you buy for 2 to 3 years? Rajagopalan wants to know. Vineet, what's the view?
Definitely good, very strong franchise needs to be bought.
Okay, and that brings us to the end of this rapid fire segment and indeed on the queries as a whole. Thank you so much, Vineet and Akshay, for joining in, for answering all the questions that you did. All right, that brings us to the end, as I said, of this program. It's been an absolute pleasure bringing it to you from Mahima and myself, from the team that put this show together. Thank you so much for watching. Do stay tuned. KYC is up next.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए.
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company? Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today, we are talking about a real estate company, that's Mahindra Lifespace. Well, in terms of what the company does, as I've mentioned, it is engaged in the development of residential facilities and to a certain extent commercial complexes as well. It does identify as a growth gem by the Mahindra Group, as when about 51% of the stake is owned by Mahindra and Mahindra. They are in fact the promoters of this particular company. And the company is planning to scale its business to as much as 5 times over the course of the next 5 years, where the potential of the business could be around 8,000 to 10,000 odd crores. At the moment, this company is a small cap company. It has a market cap of a little less than 6,000 crores, and it does seem like it has a lot of distance to cover. And it does seem like it does have plenty of ambitious plans on the annual as well. In terms of the residential buildings and the business, the company has completed about 50 projects across since 1996. The company is essentially catering to markets in Mumbai and Bangalore, and about 39 million square feet worth of projects have been completed. It is also in strategic partnership with Actis and HDFC Capital. Well, moving on, in terms of some key integrated cities and industrial clusters that the company is focusing on, they also have a partnership going on with TIDCO, RIICO, IFC as well as Sumitomo. And moreover, the company has in large integrated cities under the brand name Mahindra World City. So that's the brand name that you can keep an eye on. And of course, smaller industrial clusters, which is brand as Origins. Now, that said, what we usually tend to do in any show is that we intend to talk about the fundamentals of the company, and then we take a look at how the company has in fact done. So we start by taking a look at the revenues, but perhaps in the real estate space, we actually talk about the operating metrics a little bit more because they are a little bit more recent and forward-looking. The income statement is only a consequence of all the business that has happened and closed in the quarter gone by, but all this business, was a consequence of the accumulation over the past few periods, which eventually led to that income statement. The balance sheet, of course, gives you an idea about where the company stands with respect to the several elements like debt and equity, and cash flows will also give you a better picture in terms of the net cash flow specifically. Moving beyond that, we also talk about the shareholding, street credentials, of course, outlook, and also what the street is making of the company going forward. But with that, let me get in my colleague Anushi Vakharia, who's also going to shed more light in terms of how things potentially pan out for the particular company. So Anushi, good morning and thanks for joining in. Let's start by talking about the key operating metrics, which are the most pertinent here.
Right. So Agam, as we discussed for a real estate company, the key operational metrics in terms of how the launches have panned out, how the launches have resulted in the pre-sales is something which is important to focus on. Now, if we see in the last 3 fiscal, what has happened, the pre-sales growth has been on a strong trajectory for the company. In FY22, they had recorded about a 48% growth at 1,028 crore. Then in FY24, we saw this number at 2,328 crore. So we are looking at a 48, 76% and 28% of growth respectively. Even the pre-sales volume has seen a significant pickup in terms of where this number is concerned. Collections, the number of 1,153 crore has moved upwards to 1,385 crore. If you look at what is happening in terms of the launches and completions, again in tandem of what the growth numbers have been for the pre-sales is something that we are focusing on. However, if you come back to the recent period, that's a 9-month FY25 picture, pre-sales has seen about a 41% of a growth, while pre-sales volume was up around 32%. But it's the launches that has seen a downtick of around 7% in this 9-month period, while collections have, again, in line with pre-sales growth, collections has also seen about a 41% growth and completions has seen 12%. But launches is something we need to focus on, because even in the other real estate players, what we've seen in terms of the volume of launches, there has been a kind of a downtick in the last 2-3 quarters. This is also because of other challenges like lack of approvals and other results resulting to this downtick that we are seeing. So in terms of the key operational numbers, this is what we are seeing. But Agam, what is in terms of income statement check?
Right. So, Anushi, as we mentioned, that it's more of a consequence of all the completion projects and the realization, which actually eventually leads to the top line and the bottom line, which is why the income statement is not as important a statement as compared to some of the operating metrics that Anushi's spoken about. That said, we should still talk about them. So at least in terms of how things have panned out over the last 9 months odd or so, and over the last financial year as well, well, we're talking about your revenue growth, which has tripled, not tripled, but doubled for sure over a span of time. And for FY24, however, the revenue stands at around 212 odd crores, and that's actually a sharp drop. So it's not like the company has not seen its bout of volatility to come through. And well, in terms of net profitability, it has a net profit, but on an operational level, it's a loss-making company. So obviously, there are other avenues of income from which the company is currently making some sort of case for that bottom line. Perhaps Anushi can come in on this one as well. In terms of revenue, of course, we are looking at, in the last 9 months, we're looking at about 83% growth, and well, an EBITDA loss of around 114 odd crores. But its net loss also standing at around 23 odd crores. As far as your FY24 numbers are concerned, it does have a bottom line profit despite the fact that its EBITDA is a loss-making one, and that is largely on account of one-offs. But actually, it's not necessarily a neutral one. I would give it a thumbs down. Because, well, at least as far as FY24 is concerned, we are not looking at satisfactory numbers here. But Anushi, if there is anything else that you can add here and also take us through the balance sheet.
So I'll just make a quick pointer on the EBITDA now. The expectation is that people should be focusing on the EBITDA margins level also. But the company has clearly indicated that it's not the EBITDA number that one needs to focus on, but rather the IRRs. And the target for the company is to get projects in which they can have a target of around 20% plus IRR. So that is something that we can keep a focus on. But coming to where the balance sheet is concerned now, if you are looking at the net worth value, more or less in a similar range, 1,613 crore to 1,543 crore. In terms of where the gross debt is, this is where we are seeing a significant pickup. 238 crore was the figure in FY23, but we are looking at 868 crore right now. And cash in bank also has seen a considerable pickup, 64 crore, which is increased to 97 crore. So this is as far as where the balance sheet numbers are concerned.
Right, and as you can see on the balance sheet, right, the only reason why we gave it a neutral is because this gross debt has moved up, and in relation to the net worth as well. It's something that we will quiz the management on as well. But let's talk about cash flows then. And again, as far as cash flows go, it's a net cash flow positive number, even though its cash flows from operations are negative, and in fact have come off quite a bit. But again, because of the fact that it's a net cash flow positive number, and a lot of these positive cash flows on account of investing activities and financing activities specifically is the reason why we're getting a net cash flow number here, and hence we're going to go on with a neutral rating coming down to this particular company. So that's as far as your overall statements are concerned, the financial statements and your key operating metrics. And a lot needs to still be figured out with respect to this particular company. But I will just jump on to talk about the shareholding. And as far as the shareholding is concerned, again, it's a relatively stable company, a well-held company. As I was mentioning, about over 51% stake held by the promoters. In this case, the promoter is Mahindra & Mahindra, that's the automaker. And moving on, as far as FIIs are concerned, that remains stable, 10% holding, about 21% holding from domestic institutions, and all your marquee AMCs, your big AMCs hold stake in Mahindra Lifespaces. Also, your outstanding shares with respect to others, that is out in the public in HNIs, that remains at around 18%. So not much has changed over the past couple of quarters. and that remains also a positive. And because of the fact that it's a well-held company across not just the promoter but also institutions is the reason why we'll give this a thumbs up as well. But Anushi, in that case, let's talk about how the stock has done in terms of its prices.
Right. In terms of where the stock price return is concerned for the investors, it's not been such a great 6 months or rather a 1 year period also for the company. In fact, we've seen about a 43% decline in terms of where the stock price is concerned. And same in even the 1 year period, we are looking at a 44% of a downtick in terms of their share prices. If you go and see the long-term picture as well, that's the 3-year return, it's fetched about a 16% of a return. So we are giving this a thumbs down because if you compare this with some other real estate players, now while in the last 3-4 months or so, there has been correction with a lot of these realty players. In the last 3 years, you'll observe that most of these players have recorded around 100+% of gains. So the stocks have doubled here. But Mahindra Lifespace, we are not seeing those kind of returns as compared to where the other real estate players are concerned.
Okay, so that's as far as street credentials are concerned. Before I get in, Anushi, to talk about the outlook, also want to take a look at what the street is making of this. So street coverage is something that I will pull up right now. And in terms of street coverage on the consensus, we have about 6 buys and 1 holds, no sells. So in general, overall, a positive outlook as far as the analysts on the street make up Mahindra Lifespaces. And in terms of the consensus price target, that entails a 75% upside from current market levels as well. That's as far as your street coverage is concerned. And overall, this of course is also positive, which is why this will be a thumbs up too. But Anushi, finally, let's talk about the outlook, which I'm assuming is also positive.
Right. If you look at the overall outlook, in the opening remarks only, we've mentioned that the business aim is to grow 5x in the next 5 years and make it a 8,000 to 10,000 crore of a size for the company. In line with that, we have a couple of launches that one needs to focus on, and Q4, they have 3 big launches, which includes Vista Phase 2 in Kandivali, along with Zen 2 in Bangalore, which is adjacent to Zen 1. Along with this, Citadel is also launching a new tower, for which the company has also received approval so far. Other than that, they are also exploring funding options. In fact, in the recent updates also, if we see, the board has received a 1,500 crore of approval for a rights issue. This is in line to grow their business forward. In the con call, the company had indicated about 3,000 crore of size. So what needs to be asked is whether there are more fundraise plans on the table, considering the company has set a higher target for GDV, that's the gross development value additions as well going forward. Other than that, in terms of whether net debt to equity is concerned, that should remain below the 0.5x level. So they are targeting to maintain the net debt level also in a similar range. All the real estate players, after the COVID, they have sped up their game in terms of whether net debt to equity ratios are concerned. And in line with this, the company is also expecting a below 0.5 times of a ratio for where the outlook is for this company.
Okay. Well, on that note, I reckon that it's a good time to bring in the management into the conversation and take a look at what they are saying about the ongoing business. We have, in fact, with us Amit Kumar Sinha. He's the MD and CEO of Mahindra Lifespace Developers. Well, Amit, good morning and thank you so much for taking the time out. Amit, firstly, I wanted to get a better understanding of the business itself. So, from what I understand is that the business is divided into 2 areas. One is, of course, residential. The other one is integrated cities and industrial clusters. If you could give me an idea about how the business is split between these areas and what's the outlook going forward, because from what I understand is that you want to, well, you're looking at a 5 times growth in business over the next 5 years. What are these areas which will in fact drive towards your targets here?
Thank you for having me. Let me just answer that question swiftly. The industrial business is, as you explained in your analysis, attracts manufacturing companies to set up their operations in a plug-and-play fashion in our industrial parks, either world cities or origins. We have a lot of land in 5 locations, and we are the master developers. We provide plug-and-play infrastructure to all these companies. These companies, a range of multinationals like our Chennai has BMW plant, Jaipur has JCB's largest plant, and so on and so forth. So they attract marquee investors which are looking at Make in India, both for domestic as well as global. Given the profile of the business, we have roughly 400 to 500 crore of lease revenue annually for the next 4-5 years for sure. And it may go beyond that. So that's the revenue potential that you see. From the residential side, we were, I think, as you showed, 2,328 last financial year. We're trying to grow that business 5 times in the next 5 years. So between 8 to 10,000 crore. That's our key priority. That requires acquisition of GDVs, which we have done really well in the current financial year. Just for your reference, one of the operating metrics that we track carefully is how much of land bank that you're acquiring for projects. So as a reference, F20, we had acquired 1,000 crore of GDV. In F24, we acquired 4,400 crores. And in F25 year to date, we have done 18,000 crore. So just as an example of how the business is, we are trying to scale the business. This GDV over the next few years, as we get the approvals and design done, will translate into sales for the company on the residential side. So that's the composition of our business. So so far it's 23, 28 plus, let's say 500 on the industrial side. But over the next few years, the industrial will continue to be similar size given that's the potential of the business. But the residential will scale up significantly.
Okay, well, that's the outlook for both of these segments that you've mentioned. But Amit, I want to focus more on the residential side. Now, if you look at the 9-month period, pre-sales and collections both have recorded about a 40% of a growth. Considering the next 1 to 2 years, want to understand the picture in terms of growth what is the kind of sustainable range that we should be looking at? Along with that, how are the realizations going to shape up along with this pre-sales and collections growth as well?
Yeah. So, you're absolutely right. So I look at this industry as a long-term industry. Given the lumpiness of the way this industry operates, if you get one approval, suddenly you have the ability to clock a very high pre-sales in a month or in a quarter, to say the least. And we are trying to build a company for the long term. So overall, long term, we want to grow the company to a level where we are meaningful, create great products, and have profitability hopefully in line with our peers and hopefully superior. So that's what we're trying to build. So I would look at it a 5-year or longer period of time. Given the GDV that we have actually clocked already, 5x growth translates into somewhere around 25 to 30% CAGR, maybe a little bit more. So we will target overall 5x, but if you were to break this down on an annual basis, this should be our trajectory for the next few years.
Right, Amit, can you give us an idea about the launches which have been planned in the fourth quarter, ones which have happened in the fourth quarter, ones which are potentially about to happen, as well as FY26 to give us a better picture?
Yeah, so we had planned 3 or 4 launches. 3 approvals have already come to us. There was one launch for our marquee project, flagship project in Pune, which is Citadel, which has Tower 1 tower was launched. We have Wagoli, the project is called Ivy Lush. We got the RERA at the end, just the start of this calendar year. And then we got the RERA for Kandivali Phase 2, which was our flagship project that we launched around the same time last year. So we released additional inventory on the residential side as well as on the retail side. We are evaluating the retail side. So those 3 launches happened. Zen 2 that I see on the screen, we are awaiting the final approval. The approvals lately have been slow. We have done our part of the submissions, etc. We are hoping to receive approvals any day, which will allow us to launch the Bangalore part also. For F26, we have a whole host of launches planned. Some of them that are marquee are Navy, which is in Malad. This is a redevelopment project, society redevelopment project that we have been pushing hard to bring it to the market. That's a very important one. We have a few planned like Zen 2, if it happens, great. But we have plans for Zen 2 as well as Alembic in Bangalore. And then in Mumbai, we had acquired a huge piece of land Handup as part of joint development. It's a 37-acre land parcel. We're trying to accelerate the approval and hoping that it comes through toward the end of next financial year. So these together are just an example of the portfolio that you have in terms of the new launches. And additionally, we'll have the phase launches of projects that we have already launched. So that should give us a huge amount of potential inventory that can be converted into sales for the next financial year.
Okay, so considering the launches that you spoke about in Q4 and the FY26 also, where you have a couple of these launches lined up, just want to get a number on what is the GDV potential that you're seeing from these launches. And again, if you look at what is happening in the industry for some of the key players, that they have seen a lack of approvals in some of these launches are concerned. So are you also seeing some similar signs for your business? Just want a clarity on that.
Yeah, absolutely. You're right. I think there is generally a slowdown in the approval that we have seen in the industry, especially in Maharashtra as well as Karnataka. And there's also issues with respect to EC. There's a Supreme Court going on. So even the construction, we have ready projects, sold project. We are waiting for some of the clearances to start construction. So there is an overall slowdown. But that's the nature of the industry. I think we need to build sizable portfolios so that one or two projects don't slow down the trajectory of the company. And that's what we're trying to build at Mahindra Lifespaces for the future. In terms of next year GDV, I think it's tough to say. We have right now, when we started our transformation journey a year and a half back, around the time I had joined, we thought that 45 to 50,000 crore GDV is the right potential for us to scale up to our 5x aspiration. And touch wood, we have covered the 5-year GDV of 45,000 to 50,000 crores. 75%, roughly 37,000 crores is already with us now. So huge amount of land bank has been created and gives us confidence that as we execute well on the design, as we create innovative, creative, sustainable design for our customers and able to fulfill the regulatory requirement, we should bring them to the market at the earliest. So that's what we're trying to do. The Mahindra Lifespaces of the past was very different. Mahindra Lifespaces of the future is going to be very different. And I would say the best is yet to come.
Well, no, that was clear to understand. Now coming to the capital raise plans that you have, in the conference call, if you see, there was an indication of about 3,000 crore of a fundraise requirement for the business. Now in the recent update, you've got the board's approval for 1,500 crore of a fundraise. This is via the rights issue. Want to first understand what are you going to be using these proceeds towards, and are there going to be more fundraisers considering the first half 1,500 you've received, so there would be another 1,500 crore as well?
Yeah, so I think we are thoughtfully looking at our capital. First of all is trying to make sure that we use we bring those projects that are capital efficient. So example that is, if you were to acquire a very large parcel of land in outright model, it will require a huge amount of capital and your IRRs will get affected. So especially in Bombay, JDA and society redevelopments are quite big. So of the 37,000 I had mentioned, roughly 50% of our portfolio is capital efficient. So you don't need to put upfront capital to lock those land and to get approval and launch those projects. So while we talk about 3,000 crore, I think the first step is sign up good projects which are capital efficient, which we have done in a remarkable way over the last few months. And we'll continue to be very thoughtful about the balance sheet aspect of it. The second part is, how do we use the funds? So first tranche is 1,500 crore. That's almost, our net worth is around, it shows 1,600 in your chart here, but it's close to 1,800 crore. So our fundraise of 1,500 crore is close to 100% or 80-90% of that. So that's the maximum you could do. We will use these funds as our growth capital. In the short term, we may use to retire some of our debt, which will make our balance sheet even more healthier. So that's what we'll do. And as we develop and execute projects on the ground, we have support from our promoters, Mahindra and Mahindra as a group, which is solidly behind us. The 1,500 initial commitment or current commitment just shows that we are a growth gem for them, and they will continue to support us from a balance sheet point of view as long as we execute on our commitments on the ground.
Sure. Well, Amit, there is actually plenty more that we haven't stopped you, but I guess that's all the time that we have. So thank you so much for joining us and at least giving us so much insight with respect to some of the crucial questions that we did in fact have for your company. Thank you very much for joining us here.
Thank you for having me.
But there you have it. That's the management of Mahindra Lifespace Developers telling us about all that in fact can be expected from the company going forward. But on that note, we are completely out of time on this edition of KYC. To very quickly take you through the ratings that we've given to the company, as you can see, a thumbs up for operational metrics, a neutral stance for income statement, balance sheet, and cash flows. And moving on to the next set, well, the outlook remains positive, as is the case for street coverage, and that brings us a total score of about 5.5 out of 8. But on that note, it is a wrap on this edition of KYC. Stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Viksit Bharat.
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं.
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है.
AI बहुत तेजी से आ रहा है.
Hello and welcome to NDTV Profit. You are watching Markets at 12. My name is Rutra Somaya, and let's have a quick look at how the markets are doing right now. Definitely mixed cues in trade today. Nifty 50 is largely trading flat as we speak right now, but Nifty Bank is really strong since the start of the trade. This one is up in the trade today as we speak right now, up about 0.5%. That's interesting after a few sessions of a bloodbath that we saw on the Dalal Street. But let's also pull up the advanced decline ratio. 1:4.6 is what we could see over here, definitely in the favor of
declines as we speak right now. But who knows when the reversal will come up, and this is what we're seeing since a couple of sessions. Right now there's a fear in the market, traders, investors, every rise of opportunity seems like profit booking as the markets are faring right now. But let's also pull up the sectoral heat map. We have only the banking and the finance space which is in the green. Rest all other sectors are in the red. There you go. Media, realty are the top losing ones, down about 2% in trade. But banking and finance is up almost 0.5 to 1% over here. As there are some news from RBI, we'll definitely cover that one. But let's also speak about the constituents which are pulling the Nifty 50 index down. We have Ultratech, which is the topmost loser, down about 6% in trade now. Ultratech is also one of the top stocks in focus right now. But the other ones that are losing out are Trent, Hero, Moto, M&M. Well, we'll definitely cover about the kind of preview numbers tomorrow on the show. But up in the green, we have Shriram Finance, Bajaj Finance, IndusInd, HDFC, a lot of banking names is what we could see over here. But an interesting one is Wipro over there. But with that, let's pull up the Nifty IT index as well. Well, IT is also volatile since the start. NVIDIA came out with earnings overnight yesterday. Earnings were pretty good, above expectations, but doesn't seem to have been reflected in the Indian IT space. Wipro Infil largely trading flat, and the ones which are losing are the mid-cap ones. Remember that these mid-cap names lose the most in bloodbath and gain the most when the things are pretty green above there. But also let's talk about the Nifty banking names. Banks like Canara Bank, Kotak Mahindra, down about 1%, the top losing ones. But up in the green are AU Small, IndusInd, HDFC, ICICI, and Axis as well. But also let's move on to the top stock right now. Ultratech is in focus. Well, the cement maker is set to foray into cables and wires industry, which is actually pushing other cable stocks downwards as we speak. Ultratech is also down about 6%, but the other competitors in the space are also down, likes of RR Cable, etc., not doing pretty well. But why is Ultratech under pressure itself? Is it the concern over diversification, or is it something else? Mika joins us with more details.
It's an 1,800 crore investment. You're right about that. Over the next 2 years, they're planning a plant in Gujarat. But the question lies if Birla Group as a whole is over-diversifying. In terms of your past ventures, they did announce India jewelry ban. They were going to invest close to 5,000 crores and open 100 stores in the next 18 months. And they aim to make it one of the top 3 jewelry retailers in India within 5 years. Another one was Birla Opus. We've spoken a lot about it. It's the paint brand. They announced its entry in 2021 and launched products in 2024. And the company does target 10,000 crore revenues and to turn net profit positive in FY28. And the Birla Group as a whole is already in a battle in 2 segments. One is a telecom with Bharti Airtel and Reliance Jio, and in the apparel segment as well with Reliance, Trent, and Shopper Stop. Now, what was common, Grasim, in the paint industry and what helped, and you saw kind of pressure on other paint companies, is that the distribution network of Birla White and Birla Wall Care Putty, and around 70% of its dealers also sold paints, which helped Birla Opus and made the dealership reach second when you compare it to Asian Paints. But when you compare Ultratech and whether it has anything common with the wire and cable industry, the simple answer right now is no. They have negligible synergies in terms of stuff like raw material sourcing, distribution, as well as transportation. And the influences are also different. In cables and wires, it is electricians, whereas in cement, it is contractors, and neither cement dealers sell wires as well as cables. In terms of what could go wrong, well, amongst wires and cables, cables is growing faster. One is because of higher demand from sectors like power, data centers, and other infrastructure projects. But on the flip side, cables do take 2.5 years in terms of product development, manufacturing, and other things. For wires, on the other hand, the time to enter the market is low, and some analysts do believe that because of Ultratech's better brand recall, it would help. Lastly, potential financial impact. I'll just go through over that. 1,800 crore capex has been announced. An assumed 4.5x asset turnover gives a revenue potential of 8,100 crores at a 10% EBITDA margin, 810 crore EBITDA level, which is 4% of the FY27 consensus estimates. But there is investor concerns about the capex allocations that brokerages have been citing.
Definitely, there is some investor concern out there, but what impact will Ultratech's foray into wires and cables will have on other competitors? Well, we spoke to the expert Pravin Sahai, the research analyst at PL Capital earlier today about the same. Listen to the slice of the conversation.
The entry of Ultratech with a very high capex announcement of 1800 odd crore considered to be a the way forward competitive intensity to heat up in the sector. But definitely, like in this sector, it's not like putting up the capacity, especially in the cable. It further takes around 3 to 4 years time frame for a lengthy approval process to supply of the cables. Whereas wire is quite easy as compared to the cables to venture out, it's required a distribution and the brand is already with Ultratech. So I think they will start with where they had not disclosed, but I believe they will start with the wire. I believe with their a lot of penetration in the retail in the different verticals. So this definitely treated as a sentimentally negative for the existing large peer set. Also, we know that large part is in the wire and cable is organized, or around 6 players account for around 54-55% of the market. So definitely it's going to be a pressure to them.
Okay, well, that was the cement sector, but let's also look at SRF, which is buzzing right now. Well, the stock is up about 3%, and this is on the back of a brokerage note, MK. They say that they are very much positive on the stock, and therefore they maintain a buy rating. Well, the stock is a little down from the day's high, but they also say that the worst is behind for all the businesses of SRF, and the growth is expected to come from the existing business also, and the stabilization of an incremental contribution from the new products as well. And they also say that within the specialty chemical space, they do expect a recovery, but this recovery will largely be gradual in nature, and they also expect firming up of refrigerant gas prices globally, and expect improvement in the packaging films business as well. So all this will largely drive the growth up. The company is also best placed in terms of capex in specialty chemicals business is what the brokerage house mentions over here, and the company should also benefit from agrochemical cycle turnaround is what they say, and therefore improving refrigerant prices globally is what the brokerage house mentions. Well, the target price is set at 3,250 rupees from the current levels of 2,800. So that is what we have on SRF. But I also want to talk about Realtel. Well, this one has secured 2 orders from South Central Railway. These 2 orders, talking about the first order comprises of 111 crore rupees. This one is to be executed by August 2026. Second order is of around 56